also um, the regulator when it comes to banking education in Ghana. I worked as a head of member experience and communications for 5 years before moving out to Canada to study digital innovation.
Oh, cool. That's awesome. So have you done any, you do travel throughout your country? You work in your country? Have you done any like United States travels at all? Or you just
No,
strictly, you
no,
strictly from Ghana? Okay,
yeah,
cool.
Ghana to Canada, yeah.
So let me ask you a challenging question here. Banking laws are different than here in the US. How does your country run the banking system then?
Um, so banking system in Ghana is basically, I would say, more like what we see in most countries. So I've been in Canada for almost a year. I think it's basically the same. So we run a tier system where we have the central bank as the head, and then we have about 24 licensed universal banks, and then we have lower tiers, which we call the non-bank financial institutions, almost around 500 as we speak. Various categories. We have some in savings and loans category, some in the credit union category, some in the Susu, what we like local putting together of money. We have some in the rural bank sector. We have some in the microcredit, just giving out of loan sector. So that's the structure of the whole banking industry in Ghana with the central bank and then the tier one, which is the universal banks, and the rest fall within the tier two, which is the non-bank financial institutions.
That's very, very cool. So how did you transition from Ghana to Canada?
So I'm basically in Canada to learn something different. So I'm learning digital innovation, which is more like business transformation and then technology. So that's the focus that I'm on at the moment. Not mainly banking, but the idea is that once you gain that knowledge, how you can be able to change the business processes of financial institutions and other institutions when I go back to Ghana.
Oh, nice. So what got you into the banking industry? What fascinated you to get into the field like this?
I think that the need to help people understand basic finance, the need for people to understand investment, that for me is what drove me into the banking industry. Because whilst I was at the university, I had a bank account, and anytime I went to the bank, I could sense the level or gap of financial education within the country. My idea was not just to work in the banking industry to sell products, but also to educate people, to help people to be enlightened within the financial space. And for me, that's the good thing about what I push me into the banking industry. Again, building relationship is also one of the things that I got from the banking industry. You get to meet customers every now and then. One of the banks that I used to work at, I was managing over 15,000 customers at a branch. That means that you always have to engage people, build your human relationship side. These are very important aspect for me as a young bank.
15,000 customers at a branch?
Yes.
Whoa, that is a load.
Yeah.
Let me ask something comical here. Have you ever had a customer try to get into an argument with you over just the littlest thing?
It happens so many times, so many times.
My available balance in this checking account, you took a fee out. What the heck's wrong with you people?
Yeah, yeah.
All right. So I got a set of questions here that Teddy wanted me to ask you. So do you believe the financial success is more a matter of intelligence, opportunity, or behavior? And why do you think we've misunderstood that for so long?
Thank you very much for this very important question. For me, I think that managing finances, managing your money is more of about 20% of knowledge and about 80% behavior. High intelligence for me will help you to understand the complex financial product technologies within the financial product, but it doesn't automatically grant you emotional intelligence. You need intelligence and discipline to be able to manage your finances. Often than not, we see smart people struggle because they believe that they can outsmart the market, they can rationalize their bad financial decisions with some weird logic. But at the end of the day, you cannot get overconfidence when it comes to your finances. You should be able to understand that it is more of a behavior than the technical competence that you have. Again, intellectual success, as we all know, often comes from one's ability to solve structured problems. When it comes to money, money is a bit messy and unpredictable. Brilliant people, often than not, sometimes we over-engineer our thought around investment. So we think of it as a very complex situation. But in reality, investment is a very simple process. You just have to stick to the simple proven strategies, which is basically consistent budgeting, understanding index fund, understanding mutual fund. These are basic things that if you understand, you will be able to translate the technical know-how to more of a behavior, which I think is about 80% indicator that leads to success when it comes to financial behavior.
Oh, very good. Interesting. You definitely sound like an expert in the banking industry for sure, giving everybody the insight of what's going on because not many people are aware of this situation, like the crisis and how difficult it is to manage money these days, with even being in a different area where you're at and here with the prices going up as they are. Yes, it's going down, but I'm telling you what, even as a business owner myself, it's critical to manage your money and budget it through the banking industry. You cannot have your bank account overdrawn. It's one of the biggest mistakes you can ever have. So let's go on to question number 2. If you have to identify one belief about money and that quietly keeps millions of people financially stuck, what would it be?
I believe that people don't buy things based on spreadsheet. They don't buy things based on applications that they have on their phones. They buy things based on their feelings. So they buy things based on their status, security that they are seeking, freedom, and trying to fill a void. High earners often justify this high current spending because they trust their intellect to be able to give them more income later on, which sometimes leads to lifestyle inflation. You have a lifestyle creep coming in where expenses at the long run will lead you to have more expenses more than your income. So there's a mismatch between your expenses and then your earnings. When that happens, our brains are sometimes wired for immediate gratification. We always want to look at the smartest way around trying to prioritize our version of today as compared to the future. So it's more of an emotional connection that we need to be able to build over a longer period of time. And once you're able to justify and identify the key point, then you have control over the psychology of money. For me, psychology of money is driven by certain factors: your behavior, your attitude, and what interests you. If you're able to control these things, then your attitude towards money will be a positive one and one that can lead you to success in the future.
Very, very good. Interesting. Different perspective. Very, very good. Okay, number 3. We have often heard people say, if I only learned more, my financial problems would disappear. Do you think income is really the problem, or is there something deeper or avoiding?
I think that if you look at the way our culture is built, especially for those of us who are coming from certain parts of Africa, where we do a lot of communal things. So your money is not your money. Your money is for the family. Your money is for your brothers or sisters. It has an impact on how we treat money and how we are able to respond to money. If you look at our childhood environment, for example, we are taught what we call the money script. If you grew up in a community or an environment where there wasn't much, there was scarcity, you might either become a hyper frugal hoarder, someone who will not want to spend, or you become a reckless spender once you begin to get money. So that is an attitude that is built once we are young. We learn these things from infancy because of how our community has been built, because perhaps we didn't have it. There's also what we call the black tax, if you are from the African perspective. This is a very powerful, culturally rich angle. In many, many, many vibrant communities in West Africa or Africa, financial success, as I said, is not an individual priority. It's a communal thing. You have to navigate the pressure to support extended family while you are trying to build your personal wealth. And this is a massive psychological tightrope that most people have to now navigate themselves around. Then again, recently we've seen the issue of social media. Social media has been able to turn keeping up with the Joneses into a global thing. Now you have to now check your lifestyle against others, and this is like a 24/7 competition. People are just flexing their lifestyle, and they can't just afford to maintain a perceived social status. So all of these things have become a part of our upbringing that if we are able to overcome it whilst we are young, then we begin to build a very strong financial base as we grow in years.
Cool. Okay. Mhm. Okay, question number 4. Do you think our relationship with money is shaped more by what we are taught growing up or by financial culture we're surrounded by as adults?
I think that it's a combination of all the things that you mentioned. I mean, if you are taught something whilst you are young, there's a tendency for you to grow with that particular attitude. So, for example, most of us are disciplined in certain areas of our life because we were taught whilst we were growing up. So we learn with that. There are other things that as we grow up through our educational system, through certain coaching programs, we are able to gain understanding and more insight into. So that also adds up to our knowledge base. Then, of course, situational issues. So your experiences, whether positive or negative, will also have an impact on the lifestyle that you are also able to build around money. So it's a combination of all, but I believe that a stronger base, which is our upbringing, is the most important for me. If you have a very strong upbringing within the financial space, understanding of money, you are likely to grow with it as compared to somebody who, by the purpose of, let's say, situational issues happening to him, mismanagement, they get to learn the right thing. It's always good to have it from the base. You learn it from the base and then you grow with it. That's a more sustainable way of growing your finances.
Very, very nice. Very, very nice. Awesome. Okay. Okay, question number 5. This is the final question, and I'll probably have a couple more, and then we'll just end it from there. Number 5, social media has changed the way we compare ourselves with offers, others. In your view, has it also changed the way we make financial decisions?
Yeah, I think that it has an impact on how we make financial decisions. As I said, it breeds lifestyle inflation. It breeds people trying to become like others. It sometimes leads you to defeat your own purpose. Sometimes it leads you to redefine your wealth. What wealth is to you may be changed by what we see on social media. So it has a very great impact of on how we do our things. But the most important thing for me is that you need to treat your financial planning like a physical fitness program. Just as physically we go through certain fitness program, when it comes to finances, you also have to treat it the same way. You need a routine and honest look into yourself in the mirror. Anytime I engage people financially, I tell them the first thing you need to do is that you need to admit that your financial situation is your fault. Once you admit that it's your fault, then you begin to make steps to correct that. So taking an honest look at yourself and your financial situation is a critical component in the growth process. And then sometimes you need to have an accountable partner or a friend who will help you accountable to your flaws when it comes to your financial journey. Once you're able to do this, no matter what happens within the social media space or online, you'll still be able to stay true to your course because you have a financial goal that you seek to achieve.
Wow. Okay. So this is kind of like examples I'll make in my career. Taking out too many darn credit cards and then thinking I'm invincible. And then before you know it, oh my God, this is due, that's due, this is due, student loans due, blah, 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 blah.
Yeah.
Then you got to go to this debt collection agency or debt collector and basically prime up your debts and put them in one big payment.
Yeah.
So that's the life of the technology and people taking out too much debt and taking a chance to gamble. Even business debt is a very big problem these days.
Yeah.
So, I mean, and then even getting a bank loan today is more and more. You got to have at least over like a 660 credit score and have no missed payments.
Yeah.
So it is what it is, definitely.
Sure.
But okay, so here's the deal. Every guest that comes on the show, do you have a LinkedIn account by chance?
Yeah, I do.
Okay, so I recommend your skills, and then you recommend my show. We praise each other, and then basically, great interview, by the way. Cool, awesome. I think it's really brilliant what you do. Um, Just a real quick question. Do you think Canada's economy is strong right now, or do you think it's weak?
I think that there has been a downside to the economy at the moment. I think that they are still in the recovery mood. We are still in the recovery mood. It's not as strong as it used to be, maybe pre-COVID. But I think that with time, if they're able to put in place the right mechanism for their financial sector, for their value chain network, they should
Yeah.
be able to recover with time. So I think that I wouldn't say strong or weak. I would say that they are still in the recovery stage, which is a mid. But it depends on the step that they take going forward, which will determine whether they become weaker or they become stronger.
Okay. This is great. It's been a privilege to interview you today, and I'm sorry that we were a little shaky today. It was travels and stuff like that that happened, and trying to find a place to sit down with a computer and everything. Usually, I'm at home doing this, but
Okay.
now I'm traveling extensively between different businesses and stuff like that. So here's what will happen: the recording will go onto YouTube, and it'll also go onto LinkedIn, X, Facebook, and Instagram, and
Okay.
any other pages as well. And then your name will be on it, like banking specialist, whatever. Teddy usually does that. I pay her to do that work. We'll have it usually up within 20 to 30 minutes. At least I will. But then the
Okay.
changes and the editing will come from her within like a day or two. So once again, she picked a very good candidate there. You have a very impressive background, and it's a privilege to have you on the Industry Illumination Show.
Thank you. Thank you. It's a pleasure to be here.
Yeah, and also I'll try to find you on LinkedIn. This is your full name right here, right? Is that
Yes.
how your name goes on there?
Yeah, that's
Okay.
my name
Because
on LinkedIn.
sometimes people will put different names up and go by different names. So,
Yeah.
but this is awesome, man. A pleasure to meet you, and good luck up there in Canada. Solid,
Sure.
solid.
Thank
All
you.
right.
Thank you. Nice meeting you too.
Have
Bye.
yourself a great day.
You too.